estate firm Compass announced $370 million in new funding this morning. This brings the company's total capital raise to $1.5 billion, with its valuation hitting more than $6 billion. Joining us now, Robert Reffkin, CEO and founder of Compass. Robert, great to have you with us.
Glad to be here.
This latest capital comes from pension funds, from basically big-time investors. What does this allow you to do?
Yeah, so with this $370 million, we're going to accelerate our growth in two key areas. One, product engineering. We recently hired Joseph Sarosh, who is CTO of AI for Microsoft. We launched a Seattle tech campus. We launched a tech campus in D.C., and we're building an AI team around him. And then secondly, we're going to double down on our core products like Compass Concierge for sellers. We front load the cost of home improvement services, painting, roofing, staging, et cetera. No hidden fees. We don't charge interest and get paid back out of the proceeds.
So those kinds of services, technology, that's your edge. What did you think when you heard of Amazon entering a partnership with Realogy, introducing their technology and concierge services to the Realogy experience?
Yeah, I think that's more of a lead generation play. We're more focused on a value creation play for advisors, sellers, and buyers. So agents, we want them to come to Compass, double their business. Sellers, we want them to sell their home for more money, less time. And buyers, we want them to find the best inventory.
So I want to talk to you about what's going on in the real estate market in just one second. But I have one question, which is, when you first came in here, and this is an amazing story, because I love a great startup story that just, I mean, he came in here in 2013 raising $8 million, and look what's happened. So it's fabulous just to see the success of it. But when you came in here originally, this was a tech play. This was being sold almost straight up as a tech story, right?
Yes.
That's how it's, and I don't know if there's a pivot along the way, but almost at the same time that you've been investing in the tech side, there's almost been like this roll-up strategy on the real estate side of all these small and large real estate companies. And so in terms of the growth and revenue growth, I'm assuming it actually has probably come more on that end than necessarily the underlying tech platform.
Yeah, so is Amazon a retailer or a tech company? Is Uber a transportation company or a tech company? I think in the future you have to be both. And the future of this industry will be the first where there's a place where you can search and do the transaction on one platform. Again, Amazon, Uber, you can do that there. In real estate, there is no place where you can search and do the transaction in one end-to-end platform, and that's what we're building.
Okay, so for all of us who are constantly looking for homes, at least, I don't know if we're really looking for homes, but a lot of window dressing that's going on. What do you think is going on in the real estate market here and just across the country? Because it does feel like it's softening.
Yeah, so I think it is softening in certain markets. That said, it's a good time to buy. Interest rates are low. You have rising income across the country. Markets are still hot in San Francisco, in Seattle, in Nashville, in Texas, in parts of even New York, like Queens.
What markets are really soft?
I'd say markets that are soft are also great buying opportunities. You can say Greenwich, Connecticut.
Okay.
Some great opportunities there, as well as in the Hamptons.
In terms of the tri-state area, are we seeing the impact yet of losing the SALT deduction? We were just talking to the governor of New Jersey a couple weeks back, and I asked him if it's showing up in the data, such as home prices. He said it's not showing up yet. But, just as a casual observer, it looks like homes are sticking around on the market for longer, and there are a lot of price cuts going on.
Yeah, whether it's SALT, the mansion tax, whether it's increased transfer taxes, I think the greatest impact is on perception. And when there's a perception from buyers that taxes are going to rise, they pause. And that's not good for anybody.
All right. Robert, great to see you.
Great to see you. Congratulations.
Keep us posted, Robert Reffkin.
Please keep us posted. This is one of those great stories. He's going to be here, like, ringing the bell with the IPO
when is
that
going to happen, Robert?
What's the long-term strategy here?
Well, look, we're likely going to have an IPO, but we're fortunate, given our capital base, that we have the flexibility and timing. And with our capital right now, we're just focused on helping our agents grow their business and better serve their clients.
We want to go public now, though.
There's some serious journalist CEO comp envy going on right here. That's really what we're. You see it every 6 months in the New York Times when they write those pieces about the CEO.
There is no envy here.
There's no envy for him.
I'm almost proud of him.
You were like writing down. Let's see if it was $6 million back then, and now it's $1 billion, and he's got 50. Huh?
I'm not doing that math.
Congratulations. I'm happy for you, and I don't care that I like what I do, so I know I'll never have.
You don't care that you make much less money.
No, I don't care if my equity is never going to be what yours is, and I'm not going to just wear that on my. Anyway, thank you.